Welcome back everyone to the channel. I hope you all are having an amazing day today. Before we jump into this massive Cardano update and everything happening right now across the crypto market, make sure you hit that like button, subscribe to the channel, and turn on post notifications so you never miss any of the biggest updates surrounding ADA, Bitcoin, and the entire crypto space. We're covering everything from whale activity, market volatility, institutional selling pressure, liquidation events, and why despite all of this fear in the market, Cardano may still be showing some of the strongest long-term signals we have seen in years. So let's get right into it. This video is for informational and entertainment purposes only and should not be considered financial or investment advice. Always do your own research before investing in cryptocurrencies or any financial assets. Crypto markets are highly volatile, and investing involves risk. Now, first of all, yes, the market this morning does not look good at all. There's absolutely no sugarcoating it. Crypto prices across the board are getting hit hard, and Cardano is obviously feeling that pressure right now alongside Bitcoin and the rest of the market. ADA has now fallen below that key 23 to 24 cent support level that many traders were watching very closely over the past several days. At the time of this update, ADA is trading around 23 cents after briefly dropping to the low 22 cent range earlier this morning. That move obviously scared a lot of traders, especially short-term holders who were hoping that support would continue holding. But it is very important to understand something here. This is not just an ADA problem. This is not some isolated Cardano weakness. The entire crypto market is currently under pressure, and everything right now is struggling because of the uncertainty spreading throughout global markets. Bitcoin itself is also seeing significant weakness right now, dropping toward levels we have not seen since back in April, while testing major support zones, including the 100-day moving average that many analysts were already warning about. This pullback across crypto is happening largely because of major geopolitical uncertainty that exploded late yesterday after reports surrounding military developments involving the United States. Whenever uncertainty enters the market, especially on a global scale, risk assets immediately react negatively, and crypto is one of the first markets to feel that pressure. Investors begin pulling capital to the sidelines, leverage starts unwinding rapidly, and panic begins spreading throughout the market very quickly. That is exactly what we are witnessing right now. In fact, over the last 24 hours alone, the crypto market has experienced nearly $868 million in long liquidations, with more than $570 million wiped out in just the last 12 hours. That is an enormous amount of leverage getting flushed from the market in a very short period of time. A lot of traders were obviously over-leveraged after the recent rallies we saw across Bitcoin, Cardano, and many other altcoins. And once the market started moving lower, those positions began collapsing one after another. This creates a chain reaction where forced selling pushes prices even lower, which then triggers even more liquidations. That is why moves like this can become so violent so quickly. At the same time, we are also seeing major institutional selling pressure, adding even more weight to the market. Yesterday alone, institutional investors reportedly sold around $733 million worth of crypto exposure, making it one of the biggest institutional selling days we have seen in several months. That obviously is not the type of headline investors want to wake up to during an already uncertain market environment. The market right now is trying to absorb multiple forms of pressure all at once. You have leverage liquidations happening rapidly, institutions reducing exposure, traders panic selling, and uncertainty continuing to grow globally. When all of these factors combine together, volatility explodes. Now, despite all of this negativity, despite all of the fear currently dominating headlines, there are still some very important bullish developments happening underneath the surface specifically for Cardano and ADA holders. And honestly, this is the part that long-term investors should probably be paying the closest attention to right now. Because While retail traders continue panicking over short-term price action, the whales are doing something completely different behind the scenes. One of the biggest developments we are seeing right now is the absolutely massive accumulation happening among wallets holding at least 1 million ADA tokens. According to the latest on-chain data, these large wallets now control over 25.11 billion ADA tokens. Let that sink in for a second. This is now officially the highest level of ADA whale accumulation we have seen since all the way back in 2017. That is an absolutely massive milestone for Cardano. Just recently, the market was already talking about how whale holdings had climbed above 25 billion ADA for the first time since 2020, which was already considered extremely bullish. But now we have officially surpassed even that level, reaching a level of accumulation not seen in nearly a decade. And this is exactly why many experienced investors are not overly focused on the short-term panic happening right now, because historically, whale accumulation during periods of fear and uncertainty has often signaled long-term confidence behind the scenes. These large holders are not randomly buying billions of ADA during periods of market weakness if they believe the project is collapsing. Instead, what we are seeing is large players continuing to accumulate while retail traders continue arguing over short-term price movements and daily volatility. This trend is not happening only with Cardano either. We are also seeing major accumulation trends across Bitcoin and several other major crypto assets despite the market pullback. That is why many analysts believe the current correction may eventually end up looking more like a temporary fear-driven shakeout rather than the beginning of some catastrophic long-term collapse. Of course, nobody can guarantee exactly what happens next, especially with global uncertainty continuing to impact markets, but the whale activity we are currently seeing absolutely should not be ignored. Now, another important thing to remember here is that while yes, ADA has reached its lowest levels since February during this recent sell-off, we have actually seen similar liquidation-driven events before. Back in February, the market also experienced a massive leverage flush that created huge downside volatility in a very short period of time. Prices collapsed quickly, fear exploded across social media, and many traders believed the market was finished. But eventually, the market stabilized and rebounded strongly afterward. That does not automatically mean history repeats exactly the same way this time, but it does show how quickly sentiment can shift once panic selling begins cooling off. Bitcoin also continues dealing with important CME gap discussions right now, with traders watching downside levels around the 69,000 range, while also recognizing that a new upside CME gap has opened around the 75,000 level. Historically, Bitcoin has often revisited these gaps eventually, which is why many traders are carefully monitoring whether this current sell-off continues lower or if the market eventually rebounds back upward next week. If the geopolitical situation calms down and uncertainty begins easing even slightly, we could potentially see a strong relief rally across crypto markets relatively quickly. Again, uncertainty is what markets hate the most. And right now, uncertainty is dominating investor psychology. For Cardano specifically, this upcoming period may become extremely important because if ADA can continue maintaining strong whale accumulation during one of the most uncertain periods the market has faced this year, it could strengthen the long-term bullish case significantly. Large investors usually position themselves ahead of major moves, not after them. And seeing accumulation hit levels not witnessed since 2017 is definitely something worth paying attention to. At the end of the day, yes, the short-term price action looks ugly right now. There is fear everywhere. Leverage is being wiped out, institutions are selling, and uncertainty continues spreading throughout global markets. Nobody can deny that reality. But at the exact same time, the on-chain data for Cardano is showing some of the strongest whale confidence we have seen in years. That contrast is incredibly important. Retail sentiment may currently be weak, but the largest holders in the ecosystem continue increasing their positions aggressively. So as always, the big question becomes whether you focus on short-term fear or long-term positioning. Markets move in cycles. Volatility is completely normal in crypto, and historically, some of the biggest opportunities have often appeared during periods where fear was at its highest. Again, no one knows exactly what happens tomorrow, next week, or next month, but the data right now is showing that some very large players continue betting heavily on the future of Cardano. Let me know your thoughts down below in the comments. Are you buying more ADA during this dip, holding your current position, or waiting for more confirmation before entering the market? I definitely want to hear what you guys are thinking right now, because this is one of the most important moments we have seen for Cardano in quite some time. If you enjoyed today's update, make sure you smash that like button, subscribe to the channel, and turn on post notifications so you never miss any future updates surrounding Cardano, Bitcoin, and the entire crypto market. Thank you all so much for watching. Stay safe out there, and I will see you all in the next one.